Hello and welcome. You're watching Business Today TV. I am Sakshi Batra. Well, as the RBI has now raised the benchmark lending rate or the repo rate by 40 basis points in what has been the first rate hike since August 1st of 2018, home loan borrowers are now getting worried about the hit on their pockets. Now, to discuss and to help us understand the impact of the RBI rate hike and what it really means for you, if you have an existing home loan or are you thinking of getting a home loan now, I'm joined by a very special guest who's joining right in, Mr. Adhil Shetty, co-founder and CEO of BankBazaar, joins right in. Adhil, thank you so much for taking the time out for Business Today TV. Appreciate you joining in.
Thanks, Sakshi. Happy to be here.
So let me just kickstart by saying and asking you rather that our home loans or EMIs on home loans going to get more expensive now with this new shocker of a move by RBI? And if yes, by how much? Is it going to be in tandem with the 40 bips done by RBI or more or less? Could you help us understand all of those?
All right. So let's start with an assumption that you are on a repo rate home loan because that helps simplify the numbers in this example. So this 40 basis points increase in repo rate is automatically going to hit you within 1 quarter because that's when the repo rate home loan resets. Now, what is the quantum? Now, there are two things which can happen. Either your EMI tenor can be increased, keeping the EMI constant. So if we take a 50 lakh loan, which is a 20-year period, because of this 0.4% increase, the tenor of your loan will go up by 18 months. So essentially, if your EMI stays steady, you will have to pay 18 months extra EMI at the end of your loan.
Okay.
The second option, right, is if you allow your EMI to go up, but maintain the tenor constant. So in the same example of 50 lakh 20-year loan, if the EMI goes up, your EMI goes up by 1,250 rupees per month. And that's the increase attributable to a 0.4% increase in the repo rate for a 50 lakh year 20-year loan. So two things could happen. Most likely, the bank will increase your period. So you'll end up paying 18 months extra EMI.
Okay.
Or secondly, if you want loan period, then your EMI will go up by 1,250 on this example 50 lakh loan.
Right. I understand that those are the options that perhaps banks will end up giving all the borrowers, existing borrowers of loans. But what is the difference between, say, somebody who has already got a fixed home loan rate at 8% earlier? Can he or she really heave a sigh of relief? Will there be no impact on that fixed home loan rate, even despite this RBI's rate hike move?
Yeah, so good question, Sakshi, but let me put this in context, right? So the first thing is that fixed rate home loans are actually a very, very small proportion of the market. So what I mean by that, right, is less than 10% of people actually have fixed rate loans. More than 90% of people are on a floating rate loan, which is why they're impacted by the previous question. Now, people on a fixed rate loan, right, also typically have it fixed only for a certain period in time, right? So it's typically fixed for 3 or 5 years, not fixed for 20 years. So depending on where they are, it might start floating soon. Thirdly, right, just think of me as an example. In spite of the 40 basis point increase yesterday, I'm currently paying 7.1% for my home loan.
Okay.
So 8% is still higher than the 7.1%. So I would say, right, that most people should be thinking about a floating rate loan and they should not be worrying about what is outside their control. So the fact that the repo rate went up is outside my control. So was I upset yesterday that the interest I'm paying goes from 6.1 to 7? No, actually, I was not upset. What I was more concerned about is what can I do that is in my control.
Yeah, absolutely. You're right over there. Could you also help us understand what should the existing home loan borrowers now do who have a floating home loan rate? Is it better for them to switch to a fixed rate, perhaps to save on the upcoming rate hikes? Now, we all understand that this could not be just one rate hike that the RBI has done. Because of the macro setup, there could be more coming in. So what's the best option for them?
Yeah, great question, right? Now, I wouldn't go down the path of shifting to a fixed rate. The reason being that a fixed rate loan is typically, 0.5 to 3% higher. It's not something we typically recommend. But I want to
Okay.
recommend two things to the floating rate home loan borrower. So the first thing, right, is a technique which we call prepayment in terms of reducing the EMI outflow. So I'll just give you an example.
Okay.
Now, because the rate has gone up by 0.4, you're paying 18 extra months EMI. Now, there's a small rule of thumb we advise at BankBazaar. If you prepay 5% of your outstanding principal every year, a 20-year loan can be paid off in 12 years. So in the same way that a rising repo rate increases the tenor of your loan, EMI staying constant, every time you prepay, your tenor keeps coming down. So maybe you can't prepay 5% of outstanding every year, but even prepaying one EMI a year, right? Or whatever you can prepay when you get a bonus automatically will reduce the tenor. So it's the opposite effect of a repo rate increase is a prepayment. So this is strategy number one. Strategy number two, right, is today there are a lot of special offers for people with credit score over 750, credit score over 800. So you can get a 0.1%, 0.2% discount. So if you're someone who maintains a high credit score, you can always look to refinance your loan, getting these special offers for people with credit score over 750 or 800. So these are the two things I recommend existing home loan borrowers on floating rate do.
Okay, so there are these two options which all the viewers can definitely explore. Also, help us understand for those new borrowers who are still mulling to get a home loan now, and they are suddenly, seeing this shocker move come in. They were still preparing themselves to pay a certain interest rate, and perhaps now that will go up. Is it wise for them at all to wait, considering the RBI may well continue to raise rates, or what is the best option for them to do?
Right. So let's see what the market expectations are, and then we'll say what people should do, right? So the market expectations are this increase itself means that if you were taking a 50 lakh loan for 20 years, you're going to pay 1,200 more in EMI. So in the old scheme, if you were borrowing at 7%, you were paying about 38,750 as EMI. Now you're paying 40,000. So automatically 1,250 monthly EMI has gone up. The second thing, right, is like you rightly pointed out, Sakshi, everyone believes this is not the last interest rate hike. So while yesterday was 0.5%, the general belief in the market, and I must preface this by saying no one exactly knows, but the general expectation is repo rate will go up by another 1% or 1.5% over the next 12 months, which means EMI will continue to go up. But as a potential home loan buyer, here's my thought, right? For me, owning my home is an important milestone and a financial decision in my life. And my wife and I want to be able to say we own our home, right? It's more of an emotional decision. So I would say let's focus on what's in our control. You know, have we built up a corpus for a down payment? Do we have a good credit score? Have we found a property, negotiated a good deal? Because there's still a lot of good deals available from builders in the market, which is why the market has been doing well. So I'd say that don't worry about things which might not be in our control. I think it's part and parcel. You might end up, having to take a longer tenor. So instead of taking a 20-year loan, you might take a 22-year loan. But keep in mind, right, these things can be dealt with. So whenever you get a bonus, whenever you get a salary increment, you can pay a higher EMI, you can prepay. So don't let this bother you. If you are about to buy a new house, continue down that path, because that's a major milestone for you, which should not be impacted by short term, whether the repo rate goes up or down.
Right. So between the two, say increasing the EMIs or increasing the tenure, what do you really recommend, all the borrowers to do?
Yeah, superb question. I think if you can always increase the EMI, the reason being when you increase the EMI, your total interest outflow gets minimized. Because what happens when you increase your tenor, right, is over the period of the loan, if you calculate the interest outflow, it's actually much higher than if you increase the EMI. Now, when you increase the EMI, it hits your monthly disposable income. And what we tell people, right, is you have multiple facets in life. You need to have an emergency fund. If there is an emergency in the family, you need to spend 3-4 lakhs, you need to have an emergency fund. You need to plan for your daughter's education, right? So I'm saving for my daughter's education, that should continue. So let's not stop any of that. But if you can, it's always better to increase your EMI when the interest or repo goes up, because that minimizes your interest outflow over the lifetime of the loan.
Okay. So last question there, you've suggested to us what is the best option to do between increasing EMIs and increasing the tenure. You've also helped us understand another way could be prepaying home loan whenever such situations come in. Which are the other ways that you suggest borrowers can prepare themselves? Now since we are in a rising interest rate scenario and this 40 bips is not it, what is the best way to prepare oneself for this scenario?
Yeah. So given that repo rate increases are outside anyone's control, right? I already spoke about the two key tools, and I'll mention a third tool now. So the number one tool is prepay, because by prepaying, and we gave an example which we recommend at BankBazaar, saying prepay 5% of your principal, and your 20-year loan can become a 12-year loan. That's number one. Number two, we said keep your credit score high and look to see if you can get better offers because of that. The last tool, right, which I want to recommend is consider if there is a benefit for people who are on a BPLR or an MCLR or a base rate loan, right? Because the last RBI data said that 60% of people are still not on the repo rate as of December 2021.
Okay.
Consider moving to the repo rate if there is a saving of over 0.25% to 0.5%. And you can refinance either with your existing borrower or with a new home loan borrower. But if you can save money by getting a lower interest rate because you are on a different regime, which you signed up for much in the past, even today with these increases, right, home loans are still in that 7% range. So if you're someone who's paying, 8%, 7.5%, do consider refinancing to a new loan right now.
Okay, understood that. Well, on that note, thank you so much, Adhil, for sharing your thoughts with all our viewers, helping them make sense of this surprise move by the RBI and how should one really prepare themselves for a rising interest rate scenario and what is the best way to deal with this. Thank you so much for sharing your thoughts with all our viewers.
Thanks, Sakshi, for the insightful questions. Thank you. Goodbye.
Thank you.
If you like the video, do like, comment, share and subscribe.